This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello everyone and welcome back to the Research Talks here from Stockbox with, of course, Alan Green and Dan Flynn. So, chaps, how has your week been? Gold again, breaking all-time highs, I see.
It's been a gold week, hasn't it? It's just pushing through. I think, Trump and all the attendant uncertainty has just ensured that gold will keep on pushing higher, which is great. It's yet to filter down into the resources space, but I suspect we'll see some movement later on this year on the small cap stocks. But was interested to see Trump's reaction when he had Charles Schwab in the room. You've made $1 billion this year, or today, haven't you, or similar? So all of the companies like IG and the companies that run trading platforms have absolutely cleaned up over the past few weeks. So. If you weren't in beforehand, now might be a good time to buy some shares in those companies.
Yeah, maybe. I don't know what the market's going to bring. I mean, we have seen increased numbers on some of the views in the last week or two. So I think that's perhaps suggesting that perhaps more eyes are coming back. I don't know, more investors are perhaps coming back. I don't know. It will take a little bit of time for sort of capital to be replenished on how it's been for the last couple of years, but I don't know. But it's as I say, it's good to see gold continuing to do quite well. I mean, the Bitcoin, which is a very good, I class it as a bit of a risk on appetite. I mean, that's still hovering around the 85,000 level. So that's, maybe it's finding a new floor there, though. It could be. I don't know. Dan, what do you think? What have you been looking at this week?
Yeah, well, like you guys have been looking at gold as well. And I mean, it's unbelievable, really, isn't it? The scale it's going up. It suggests that people are really, really anxious about what Trump's doing and how it's going to change the world order. I was reading something earlier all about how the world seems to be losing faith in the dollar as the global reserve currency. And, if that's the case, that's just going to change everything. Like, we can talk about tariffs and the short-term impacts on equity markets, but the longer term things here, like with the dollar's place in the global financial system, are the things that really stand to make a difference. And you have to wonder whether Trump and his gang thought about that when they went in all guns blazing earlier this month. I suspect not.
Well, yeah, I don't know, but I did see something the other day. The bond market rules everything, and the bond market was starting to go a bit nuts, and I think then Trump backed off.
Yep.
So I think it was mused that the bond market controls the markets, nothing else. I don't know. But,
that seems to be who he answers to.
Plus there have been an increasing number of calls for his impeachment as well. I think given the so many Americans are concerned about the status of the USA globally now, and but I think they've done irreparable damage to their status as the world's policeman, if you like, and obviously the dollar with that as the world's reserve currency. China, well, the renminbi, is it? I think that's going to become increasingly important in the coming years. So the dollar is very much under threat, as you say, Dan.
Well, I think you've definitely got two. Differing polar opinions, haven't you? You've got the people who are all for Trump and really like what he's doing, homegrown Americans, and then you've got something I saw on the BBC where American tourists in Europe are keeping a low profile, because they don't want. They're sort of a little bit maybe embarrassed about what the United States is doing. So you've got two. You're always going to get the two, but it is quite polar. But what it means for the market, I guess, is just more surprises. I mean, the S&P recovered, didn't it? Not obviously not back all-time highs, but it's sort of bounced back from that flash crash. And maybe that was sort of needed. I don't know. Was it insider dealing? Was it a chance for people to make some money, or was it an opportunity to just flush some cash out of the system and start, I don't know, money filtering down to other areas? I don't know, but
You have to wonder as well what's going to happen with dividend stocks further down the line, because all of these supply chain stresses are really going to make it hard for companies to keep raising. They're going to have to, like during COVID, we saw so many companies cut because they had to save cash to keep the show on the road. And you can kind of see that happening again. Not to be too negative, but it's something that I've been thinking about.
Yeah, good point.
Yeah, well, there's that. And then we're going to talk about AI stocks, aren't we, today? And we've got some AI has been talked about a bit more, the tech stocks. It's becoming more and more powerful. There's an IPO coming down the pipe, I understand, on the LSE for another AI play. So I think it's important to be aware of what's coming on in the space. CapAI is one we're going to talk about, which of course had Professor Ron John Nag joined recently, a serial entrepreneur, inventor, an investor, as he says, as we'll play the interview clip. And what's important, I think, to consider with the AI and the tech stocks is similar to what happened in .com, which is it's not the technology that makes the money. They do well. It's the utility, and it's finding the utility, So Netscape obviously did very well, but Amazon did a lot better. So a lot of these companies you're going to find coming out, they'll try different utilities, and there'll be some real amazing unicorns from them. At the minute, we don't have much choice. And we're going to hear about one, CapAI. I know, Dan, you've been doing your research on that one.
Yeah, definitely. Yeah, so CapAI is a stock I covered in this week's newsletter, where we looked at the growing number of early stage AI opportunities in the UK. And I thought it'd be good to cover it on here, as I don't think we've spoken about it before on Research Talks. So there's two things I think to note about CapAI in particular. The first is it's attracting a lot of attention and speculation from the market, an enormous amount actually. It's consistently one of the most discussed stocks on LSE, and volume is vast. And the second is that at this point it's very early stage, and there's few details of its plans currently published, which sort of comes into what you're talking about, utility there, Mark. Aside from the general hype about AI, and along with the fact that CapAI represents another early stage, relatively under the radar way to get exposure, what seems to be getting people hot under the collar about CapAI in particular is the involvement of Professor Ron John Nag. I highly recommend listeners check out your excellent interview with him from a few weeks ago to hear all about who he is and why he's involved here. But I think you got a clip, haven't you, Mark, here?
Indeed, just a bit of a short clip, about 3.5 minutes, just summarising the essence of the interview. As you say, it perhaps at the minute lacks detail. It's still talking about concepts. But what I like about Ron John Nag is his track record, effectively, with what he's done with his private company, R42. He effectively wants the public entity in order to do that. And listening to him and interviewing him, I got a lot of confidence in him personally, and a lot of the reason you buy a stock is because of the people in the business and their ambition. So I'll just run that clip and then we can discuss it a bit more.
I've been working in AI actually at this point for 40 years. And my first system was 1983 at Birmingham University. Went off to Cambridge, went off to MIT, went off to Stanford. After all that, no one would give me a job, so I had to start companies. Did speech and handwriting recognition, sold that to Motorola, invented the mobile app store, crowdsourcing intelligence, sold that to BlackBerry, and then advised a company, Vocal IQ, that did speech recognition dialogue systems, pre-GPT, sold that to Apple. Last 10 years, really looking in mathematics and medicine. I've got 3 personas. I'm a teacher at Stanford University. I'm an investor at R42, my venture fund, my family office venture fund. And thirdly, I'm an inventor. So I invent things too. CapAI is interesting because it's a public entity. It's a listing entity. And what really, I'm not a director yet, so we can't sort of implement any strategies. But R42 strategies are probably a framework is where I want to go, where we invest in companies, we invent companies, and we grow them and nurture them. So we incubate other people's ideas as well as inventing our own.
Okay. So you're sort of saying that R42 is perhaps a framework that could be applied to CapAI. So before we can talk about that, I mean, maybe you can tell us a bit about what R42 has in its bag.
Yeah, R42, we have about 100 companies, AI and biotech companies. It basically rests on the macro thesis that machine learning is going to turn the world upside down. We're at an acceleration point. 95% of code will be written by machines. All of a sudden, you're going to have ideas that were previously thought to be impossible are now possible. We're doing like next level things. So a few ideas like stamp free is a good idea, doing handwriting recognition on numbers. Agemica is a good idea. We're trying to computationally discover a new vaccine, a new drug. A drug for what, you might ask? Well, it's a vaccine for aging. But that's a next level idea. You think that's a moonshot idea. So certainly what we're at R42 looking for is moonshot ideas, that things that appear impossible, but because of the environment, the infrastructure that now becoming available, now become possible. CapAI is a ground floor, really. No one's getting paid, actually. Well, the principal directors are not getting paid, and de minimis for some of the suppliers. I'm not getting paid because zero. You can think of it as kind of an Elon Musk deal kind of thing, if you like. You're getting zero, or Steve Jobs, he was getting $1 a year or something. There's no really, we want to earn the worth, not just be given it.
Sure.
And that's pretty important as an aspect, and we'll build it up, and then we'll get the earnings in that way. So I'm perfectly aligned with shareholders. The directors are the 100% aligned with the shareholders. If the shareholders don't win, we don't win.
Okay, well, yeah, there we go. That is Professor Ranjan Nag, the proposed director of CapAI. And yeah, obviously he's got a very good track record, hasn't he?
Yeah.
He sort of talks a good game, and then aligning with shareholders, which is always, very good bonus as well.
Yeah, you can see from the clip he's a pretty bright guy, I'd say. He's a massive figure in the AI market, and he's come on board now since that interview as executive director at CapAI. So I think his experience alone was a major get for the company as it looks to pursue opportunities in the AI sector. And the relationship became a lot more serious this week with the release of a strategy update where CapAI provided more details about what it actually intends to do in the AI space. So namely, the company will leverage Ranjan's expertise to accelerate the development of what it calls one-person unicorns. And from what I understand, these are highly innovative AI companies aspiring to billion-dollar valuations while being operated by tiny teams, often as small as one person. So to do this, CapAI is in advanced discussions with Mr. Nag's US venture capital firm, R42 Group, to establish an alliance which will be geared around identifying promising AI ideas with disruptive potential, incubating these opportunities by providing comprehensive resources and mentoring, and using its expertise and network to create AI companies in-house. So I think it all sounds very exciting. The idea of capturing groundbreaking businesses at the idea stage and scaling them up to disposal certainly stands to be a valuable one. And I'm sure we'll get a bit more meat on the bones regarding what some of these investments actually are and how disruptive they stand to be in the near term. But for now, I think another thing that's also caught the attention of early investors in this week's announcement is CapAI's decision to go out of its way to emphasize that it plans to do all of the above while mitigating shareholder dilution as much as it can. The company actually said it has no current plans to raise capital at all. And that's kind of in line with what Ranjan was saying in the clip, Mark, about how he's not taking, no one's taking any pay at the moment. So just to summarize, I think when you put the experience of Ranjan, the potential returns from growing groundbreaking AI firms, and the plans to avoid traditional capital raises together, it's no surprise the market is loving this stock at the moment. CapAI has already risen by some 1,200% since Ranjan's involvement was announced by
Yeah.
Wow.
And
I didn't know that.
Yeah, it's rocketing.
Yeah. And the interest and the speculation is only continuing to grow. You just go on LSE at any time and look at the amount of commentary, and you'll see exactly what I mean. So I wouldn't be surprised to see CapAI's valuation rise further from here as it reveals more about what it's planning. And it seems
Yeah.
likely that updates will be on the way sooner rather than later, given the attention that the stock's enjoying.
Well, you're right. It's getting a lot of attention. I mean, it's only still only 14 million. There must have been rock bottom before that rise came. What's the what's attracting all the chat then? Is it really Ronjon? People buying into Ronjon?
It's that, and I think there's some speculation that an RNS is imminent. Based on what I'm not entirely sure.
Right. Okay.
There are a lot of theories on there, but it seems likely that there will be an RNS coming, and I think people want to get in before something big's announced.
Sure. Well, Alan, I mean, are you familiar with it? What do you think, having seen the clip? And
I'm really glad I've just seen that because I looked at the website, but I hadn't seen Ronjon Nag in that interview. I hadn't actually seen the interview. And we talk about people, having skin in the game, people selling businesses. Ronjon Nag has just he's created the perfect company for investors, I think. His track record, he's sold a company to BlackBerry, sold a company to Apple. He's been inventing and selling on all the way through his career. He's a professor at Stanford. I mean, this guy he's for an AI company, he's the perfect CEO. And on the website, of course, they have their 3 I's: identify, incubate, invent, which is the mantra going forward. But I think he's got all the credentials in place, and the fact that they're not taking, he's not taking salary, they're just basically aligning themselves wholly with shareholders. It's probably the perfect setup, actually at the perfect time for the AI industry. And I'm not surprised there's a lot of excitement around this. And I only wish I got it myself a few weeks ago. But even so, I think at this level, given what's going to come, it's worth buying now. Goodness.
Yeah.
Well, yeah, like you say, Dan, you're sort of waiting for, the big announcement of what projects are they going to roll in or start working on, and that's clearly what's driving the speculation. Great to see. I mean, I'm sure we'll be seeing, some pretty significant developments from them. And you want to be in this space at this time, don't you? As I say, there's a few AI things coming down the pipe. And if you want to be one of the, as I said at the start, if you want to be the Amazon that has the utility out of AI, go with someone who's done this before, track record of selling to Apple, selling to BlackBerry, Motorola.
Yeah, I think there's also a good argument to be made that with so much uncertainty around the future of a lot of sectors right now with the tariffs, one thing we can be sure of, I think, at this point, is that AI is here to stay. And if you can find a company like CapAI that has someone with so much experience behind them driving it forward and such a good track record, it does feel like it is one of the companies positioned to make the greatest returns over the long term.
Yeah, agree with that.
Indeed. Absolutely. Well, thank you very much. That was a good little segment there on CapAI. So I know they were on Stockbox. I'm hopefully going to get them on again in the near future. And we'll see what they come up with. But for now, that's a good little scene setting of CapAI. So we want to talk about some other companies. So Alan, do you want to take away your company that you want to cover this week? You've got Frenkel Topping, or indeed, who's the other one we wanted to talk about?
Harena Resources. Yeah, that's it. Yeah.
Harena.
So
Harena
I'll start with
Resources,
Frenkel Topping, which of course is London listed. FEN is the EPIC code, and despite sounding like it, it's not a German Black Forest Gatto or any sort of dessert. It's actually a company that provides financial advice and asset protection to clients at times of financial vulnerability, and they're experts in the field of personal injury and clinical negligence. So the personal injury and clinical negligence space is very fragmented, and Frenkel Topping was set up to consolidate that area. And throughout their time on the market, they've made some acquisitions and bought companies in together to create a single unit. They're also they have a company under their umbrella called Cardinal, and Cardinal have set out to work closely with major trauma centres, providing signposting and partnership opportunities inside these major centres. So perhaps patients who've had problems or who had issues can go straight to somebody and talk to them about the case and the situation. And it's a very profitable business for them. The company also has a fund manager called Essentia, which manages client portfolios for clients that say have received a payout, and those funds are managed on behalf of that client. And within those portfolios, they have a Sharia law compliant portfolio and also ESG portfolios too. And indeed, in February, Frenkel Topping announced that its fund manager Essentia had won the 2024 award for the de facto defensive comparator scheme based on risk-adjusted metrics from the performance of the fund over the previous 5 years. So that obviously is something that the company can take out and speak to clients with a great deal of confidence with that award in the bag. So over the past 6 months or so, the company, along with Cardinal, has won partnerships with several new major trauma centres. Last year, it won a partnership with Sheffield Children's Hospital, and then in February, also Cardinal and Frenkel announced that they secured a new contract with the NHS Major Trauma Centre at the Royal Stoke University Hospital. So the total number of trauma centres supported by Cardinal and Frenkel is now 12, which is a significant step forward. And I mentioned acquisitions. The company acquired Northwest Law Services last year for 2.75 million, and this was funded using a revolving credit facility with Santander at the time, and this has been the consolidation and growth strategy employed by the company. During February also, we had a trading update from the group, and this is ahead, and you may remember I spoke about companies previously with the full year news or the full year results announcement a week or so away. Again, Frenkel Topping announced their full year results on the 28th of April, so we're a couple of weeks away from that now. But the company issued a very solid trading update. Revenues were up 14% to 37.4 million. Now, of that, recurring revenues grew by 12% to 13.4 million, and non-recurring revenues grew by 15% to 24 million. So that's a pretty strong performance. Gross profit up 4% to 14.5 million. Cash up 29% to 3.1 million. Although net cash is minus 3.8 million from a 2.4 million positive last year due to partners in costs, or referred to as PIC by the group, an issue which has now been resolved, and also part of the Northwest Law acquisition too, even though the funding came in from Santander along with that. The company also announced a 17% increase in funds under management to 1.5 billion. Discretionary assets also up 26% to 1 billion. And looking forward, it said that the increased national insurance and minimum wage costs would affect the outcome by some 200,000 on the year. Nonetheless, going forward, the company is very confident of continued growth in shareholder value and continued growth in the business. And given that this is such a niche business and it's a consolidator, I think looking at the share price, I think it's been unduly punished. We're looking at the share price at the moment. We're seeing shares trading just off a year low at 32p, year low 27p, year high of 54p. So I think given that performance, I don't think the concerns over the cost of the increase in NI and the minimum wage warrants the shares being down at this level. So I think there's an opportunity for recovery. I don't think it's going to be a spectacular performer by any stretch of the imagination. But again, as a niche company offering, I think, a defensive investment proposition in this uncertain world, it could be a very valuable part of the portfolio.
Okay, interesting. Yeah, a new one there, Alan. But nonetheless, a sort of, what you say, it won't be spectacular, but sort of slow and steady, and sort of a nice little one for your back pocket.
Yeah, cash generative. Making acquisitions, further consolidation within that sector. But yeah, I think this. We hear about, or you seem to be hearing increasing numbers of cases where perhaps the NHS have been potentially negligent, or life has been irrevocably altered by an operational or what have you. And this is where Frenkel Topping come in with their offering. So it's a niche area, but one that I think is going to deliver improved revenues in the future.
Okay, good. Well, Dan, let's talk about Oracle Power then. I was supposed to interview the CEO, Menmon, this week, but unfortunately she was waylaid. But maybe you can tell us about Oracle Power, and maybe I can prepare some questions for her when we do speak.
Yeah, absolutely. So Oracle Power has been around for a while, but we've seen some real life come back into the stock over the last couple of weeks. Volumes spiked on several updates, and shares have risen by as much as 80%. Still, with a market cap of just 2.6 million currently, it seems like the building interest could easily translate into further upside here if good news continues. So what's been driving the interest? Well, there's Oracle's been delivering news from a few of its projects over the last couple of weeks. On Wednesday, it announced the renewal of a strategic agreement with China Electric Power for its green energy project in Pakistan. On Tuesday, it announced the completion of geochemical sampling over multiple gravity targets at its Blue Rock copper project. But the developments I want to focus on today are those at Oracle's Northern Zone gold project in Western Australia. So Northern Zone is located right next to the Kalgoorlie super pit, which is one of Australia's largest open pit gold mines. And it's highly prospective for what's known as orogenic lode gold deposits, which are prevalent in the area and also extremely valuable. So Oracle has a exploration target for Northern Zone of 250 million tons of ore, a grade of 0.6 grams a ton gold for 4.8 million ounces of gold. And last year, this target received significant validation when drilling identified a massive 600-meter wide porphyry system at the project. Now, as of February, Oracle's position in Northern Zone fell to 20% after Australian miner Rivers Gold exercised its farm-in option over the project. But while it's no doubt a significant drop from its previous holding, it is worth remembering that even 20% of a 4.8 million ounce gold project is extremely valuable in this high gold price environment, especially for a company with a market cap of less than £3 million. Just as importantly, Oracle has had to contribute nothing financially to the significant drilling Rivers Gold has completed this year to add further value at Northern Zone by learning more about the porphyry I mentioned. So the results of that work started to come in this week, and frankly, they've been pretty impressive. Assays from an initial 11-hole RC drilling program spread over 2 RNSs have confirmed and enlarged the shallow gold mineralization that was associated with the porphyry. In fact, every hole intersected gold, which significantly raises the project's potential of hosting a large, low-cost, high-tonnage open pit operation. So I know like you say, Mark, your interview with Oracle got postponed. But if you do get to speak to them, I'd be interested to know about what sort of scale of mining potential the company sees at the porphyry. Personally, though, I think the next truly significant milestone for Northern Zone is likely to be the publication of a planned mineral resource estimate. This is going to cover the upper section of the porphyry to generate an economic starter pit. And the partners have said they will begin advancing the work for this once their drilling has provided them with a sufficient understanding of Northern Zone's geology. So once we have that in place, the market will have some real figures to mull over. And that might trigger some buying from people waiting in the wings right now until this opportunity is a little more advanced. In the meantime, with assays for a further 36 drill holes currently being processed, there's clearly potential for the interest being generated right now to continue growing over the short term. Oracle and Rivers Gold are certainly confident. They've already submitted for a mining license at the project. So I'll be keeping an eye out for more significant results over the coming weeks. When you add in the potential from the other projects in Oracle's portfolio, which we'll look at perhaps in a future episode rather than trying to cover everything in one go, because there are a lot of irons in the fire here. And once you put aside the potential for any raises, which I think is a consideration when it comes to any exploration company, there's a good argument to be made that Oracle looks undervalued at its present valuation.
Okay, good. Alan, you got any thoughts on Oracle?
It's an interesting company. Just look at the website, and you go to the project section, and you have to scroll down because there are quite a few projects that the company's involved in. But I think you're right. The gold project in particular, the Northern Zone Gold Project, is the one that is of interest at the moment. And if the additional drill results do come in where it's hoped, given where gold is now, then that could be very exciting. And I think what often tends to happen is where you get split asset ownership like this, then maybe the operator, maybe Rivers Gold, or maybe another mining company might come in and make Oracle an offer for their percentage holding. That often happens. You often see the stakes being sold on or exchanged for perhaps another project. So there could well be some activity in that regard too. But certainly, it's now is on my radar. I shall be watching with interest.
Good. Well, Alan, do you want to finish us off with Harena?
Yes, Harena Resources. So a long-awaited IPO for the company took place in February this year, and the company is now on the market. Epicode HREE IPO'd at 3p, excuse me, and has come back from that since the IPO. Currently trading at 1.77p, has been as low as 1.47, but I think we're going to see the company and the asset progress substantially in the coming months. So Harena Resources, it's the owner and operator of the Ampasindava rare earths project in Madagascar, which is an ionic clay rare earths deposit with a defined mineral resource estimate of 628 million tons of at 895 parts per million total rare earth oxides. And of course, these rare earth oxides include all the magnet metals, neodymium, praseodymium, dysprosium, terbium, and others like lanthanum and yttrium as well. So it's a well-established asset. It has a 43101 report published, which basically constitutes the mineral resource estimate. Already, it's well advanced. 5 stages of metallurgical test work have been completed, and the results of the study have concluded that the heap leach process will provide a very acceptable mineral yield into leach material, and from there, obviously, the production of the rare earths. So the project is currently in proof of concept phase, and the RTO was executed to fund design-related study work just to finalise the economics of the project and also the technical viability of the asset. And that certainly made some progress with an announcement this week that I'll come to in a second. Already over 4,500 test bits, 277 holes have been drilled, and one of the big differences with this project that it is a very low impact project and also easy to manage, which means low costs or low production costs and zero residual impact. The reason for this is that the mineralization is a few meters under the surface, and when a pit is dug or when an area is mined, the extracted residual material is that washed and then returned and covered with stockpiled extracted topsoil. There are also seed farms adjacent to the project which supply will supply a revegetation program. So once the mining has been done, you'd never know they've been there. The land is returned to its original state, which is very important in this day and age. So as I said, the RTO took place in February. They raised 1.35 million at 3p, and they gave the market cap of approximately 12 million on admission. And then this week we heard from the company that the metallurgical test work results from the iron absorption or desorption process, which saw high extraction rates using an ammonium sulfate leach. And the tests on 54 samples were undertaken by the University of Toronto, a company called Autotech, and also SGS Lakefield, a well-known laboratory within the mining sphere. And we saw some very strong results: 88% neodymium, 73% dysprosium, 67% yttrium, and also 86% lanthanum as well, which was interesting. That was from the University of Toronto test. SGS Lakefield used the pH5 ammonium sulfate test, 87% neodymium, 88% neodymium, that's it. 88% praseodymium, 71% dysprosium, 75% terbium, and 63% yttrium. And good results across the board. And Joe Belladonna, the chief executive, said that the results really demonstrate that the Ampasindava process will be environmentally and ecologically friendly, and also the low risk reagents that they used in the leaching process won't require a tailing storage facility either. So that is a further boost to the economic and technical viability of the asset. So, of course, this is an asset that isn't reliant on China either. It's totally independent, and in this day and age, it's going to be hugely important. And the product will no doubt be in huge demand when we come to production. But the team are working flat out there at the moment, so there's going to be a lot more news flow in the coming weeks. And where we are at the moment, well below the IPO price, I think the company offers excellent value, and the demand for rare earths is only going to increase in the coming weeks and months.
Yeah, absolutely. Okay, good stuff, yeah. Alan, good stuff. So we're waiting really there for a bit more things to sort of come through. But all in all, you think it's looking like a fairly decent early stage opportunity?
It's not really early stage. I mean, so much work has been done there already, but they're in the proof of concept phase now. So if you like, we're in the PFS phase, going through the PFS, proving up the asset. The 101, the 43101 report has established a mineral resource estimate, but now it's that they've established the process. The test work has established how they can extract the rare earths from the ionic clays, and then it's a feasibility study establishing the technical viability and also the project economics too. So we're going to be hearing more about those in the coming weeks and months.
Good. Okay, Dan, do you have any thoughts on that before we finish?
Yeah, I'm glad you brought this one to our attention, Alan, because I think rare earths projects in countries other than China are just such a good opportunity right now with all the export restrictions, and given this one so far along, as you're just outlining, it seems like all it has to do is put out a few more decent RNSs showing some progress, and you could see interest increasing a lot in a short time frame.
Yeah, I think it's again, as we all know, within the mining industry, the time lapse from the asset being established and the resources being established to actual extraction and commercialization, it's often a huge gap. But I think the urgency that is now it's an urgency across the Western world to find these resources and obviously extract them. And Pasindava is a huge resource in that regard, and it could potentially become a very important asset. And I'm sure the US will be looking closely at this, and also Europe as well. So I think if there's any opportunity to fast track the asset, if the company needs to raise further funds to do that, or perhaps funding from various government agencies. I mean, obviously, for example, with Frenkel Resources, the US DFC has provided $5 million worth of funding. That sort of funding could be put in to accelerate the process. Anything could happen, but that's obviously just speculation on my part at the moment. But I think where we are right now, the macro picture really supports that sort of potential acceleration for the project.
Excellent. Well, thank you both, as always, for your time today. Lots to discuss there. So, and have a good bank holiday weekend. We've got a few days off.
We have, guys. Yes.
That's right.
Excellent. Well, thank you very much. And we'll speak next week.
Happy Easter, one and all.
Thanks, both.
Happy Easter indeed. If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.